Hello, everyone. My name is Aaron Hulkran, and today I want to talk to you about what is net operating income and what is it used for in our real estate portfolio. Again, am not an accountant, attorney, or a financial planner, so all this information is for educational purposes only. Net operating income, or NOI as it is commonly referred to, is a basic fundamental that we need to know when we're looking at our investment real estate portfolio. Net operating income is NOI is calculated used to analyze the profitability of income generating real estate assets. So it allows us to calculate profitability is what NOI is. NOI is found on the income statement. So when we're looking to calculate it and understand it, we want to see that income statement, 12-month trailing 12. We can calculate it from the tax return, but the income statement is my preferred method. This is a pre-tax figure, so this is before any sort of income taxes and whatnot. This excludes, this is important, everyone, NOI excludes principal and interest on loans. So all the principal, all the interest on the loans are excluded. Capital expenditures. What's a capital expenditure? Capital expenditures are those expenditures that we don't see, annually. Example, larger expenditures like a new roof, right? If we have to put a new asphalt roof on the property, that would be a capital expenditure. Those things are not taken, or those things are excluded from the net operating income. Depreciation and amortization. So when we're looking at that income statement, if there's depreciation on there, taxable depreciation, we want to add that back in, as well as amortization. So again, principal reduction on the loan is not part of, we exclude that from the NOI. What do we use NOI for? So we're going to talk about that a little bit. This is a fundamental that we want to understand in our real estate analysis, and we use the net operating income for cap rates. We calculate and determine cap rates based on net operating income and debt service coverage ratios and some others. So it is a fundamental that we'll want to learn and understand in our investments. Here's an example of an income statement, right? So here we just have, and this is very abbreviated, very small income statement, but for our educational purposes, is perfect. So we have $12,000 in rental revenue, right? Top line here. We've got property management, real estate taxes, repairs, insurance, interest, and amortization, right? So in this particular income statement, we have $82,000 or $8,200, excuse me, in expenses for $3,800 in cash flow. So very, very standard income statement that we would often see. So in this next one, this is exactly how we would, on this statement, calculate our net operating income or NOI, right? Still got all the same exact income statement here with that $8,200 in expenses, $3,800 in cash flow. But here we go. So we're going to add back in the interest. We're going to add back in amortization or principal reduction on our loan to get to $7,300 NOI. So on this particular asset, we have just calculated our net operating income is $7,300. If there was other things like capital expenditures on there, like again, any roof replacements, any large CapEx things, if we went in and say it was an apartment complex and we renovated a unit, put all new cabinets, that kind of thing in, again, that would be a capital expenditure. We would add that back in. But for this purpose, we add back in the interest, we added back in amortization. If we were to show some depreciation here, that would also get added back in. But pretty simple calculation to understand, but critical piece as we look at our investment real estate and try and understand it and analyze it. So thanks everybody for joining. If you like and share this video, I would appreciate it. And if there's any topics that you guys would like to learn more about, comment. I'll keep looking for those, and appreciate you paying attention and joining in today.